Hey guys, Micron stock is set to double from where it is today. We're going to look deep into the financials of Micron stock, why that points to a doubling of the price in the near future. A lot of analysts think it will double quickly. I am one of those who agree. And really the reason it's trading so cheaply is based off of various things, but a couple of things are: one, they're spending a lot of money on CapEx. A lot of skeptics don't think that they're going to get an ROI on that CapEx. And two, they think CapEx spending from hyperscalers is going to slow down in the next couple of years, and that will lead to less demand for chips. We're going to explain exactly why they're wrong. We're going to dive into the filings from Micron and why all of the data is pointing to a massive doubling of the stock in the near future. Guys, please like and subscribe. My portfolio was down this week, about 0.8%, down to 1.179 million. How are you guys doing in the stock market this week? Let me know in the comments. If you guys want to follow along which stocks I'm buying, which stocks are in the portfolio, click the link and join my Patreon. It's a private group. Now, before we jump into the 10K filing, which is going to look into the financials of Micron stock, why all of that points to a strong financial situation, a doubling in the near future of the stock price, and why skeptics are wrong about CapEx spending in the next couple of years. Really quickly, I want to point out a dynamic about the cyclicality of the stock, right, and of the chip market. So it's true, historically it's been like this, right? Demand goes up and down over time, so it cycles up and down, and the stock price kind of follows that same trajectory, but it kind of slowly trends up over time, right? Now, where we sit currently is we're basically like this, right? We're at the top right here, where demand has gone up so precipitously, so quickly, that skeptics are saying, this isn't going to work out, it's going to revert back to its cyclicality, and essentially we're going to go all the way back down right here. That's like this dynamic here. That is how the stock is currently priced. It's at a forward PE of about 6, which I've talked about in a lot of my videos. A forward PE of 6 is insanely cheap. Essentially, that's pricing in like this is going to happen. Like all this growth is going to really revert back to where it was before, and it should be traded extremely cheaply. Like the S&P 500, the average is somewhere around 20 to 21. Now, we don't think this is going to happen, right? Let me know in the comments if you think that's going to happen. But essentially, what's most likely to happen here, and again, we've had this slow growth, this strong parabolic move up. This is where we're at now. And what's likely to happen, given the macro situation of what's going on, is we're probably going to come back down eventually, and then we're going to have this cyclicality again, this higher level, right? So if you look at this previous baseline down here, we're probably going to find a higher baseline, right? And given the AI chip economy, the fact that more things need chips, these AI data centers need HBM, high bandwidth memory chips, which are extremely complex. And everything continues to have more chips, right? Cars, robotics coming out, AI data centers. We're heading into a future where this baseline demand is going to be extremely higher than it was before. So I just wanted to kind of give you a quick, this is a very crude, very simple graphic, but we're going to have higher lows here, right? I think we can all agree. Now, where is that going to land? Is it going to be here? Is it going to be here? Is it going to be way up here? We could debate that, but essentially the way the stock is priced currently is for it to revert completely back down here. And I think most of us can agree that is not going to happen. So I just wanted to point that out really quickly, and that is one of my main theses for why I plan on adding Micron to the portfolio really soon. And again, guys, this portfolio is something I've been growing for many years, and I'm a long-term investor, not a trader. I just wanted to make that clear. Now, as far as the financials, if you guys don't know, you can go to investors.micron.com, see all the filings and the 10Q. Those are the quarterly financial reports. So I did pull that up here. This is a massive report. I went through the entire thing, but I do have a summary here for you guys. Let's quickly go over, a quick overview of the 10Q, the financials of the company, the most recent report, and why skeptics are wrong when it comes to Micron spending on their own CapEx, right? Building out these fabs to create more chips. Skeptics think they're going to create too much, along with competitors also, building out more CapEx to increase supply. There's going to be way too much supply. They're not going to get an ROI on this CapEx, and then the stock price is going to plummet. So let's go through the financials and let's point out exactly why that's wrong and why, although they do expect hyperscalers to slow down on data center build-outs in the next couple of years, that's not going to matter, because the fact that these chips, they cycle through them every few years, right? So, you know, these chips can last anywhere from 3 to 6 years. So by the time they're done building out all these data centers, these AI data centers, they're going to have to start upgrading, right? So that's going to continue to lead to more demand. But let's check out the financials, and then we'll talk about that in just a second. So this is an overview of the 10Q for Micron stock. So Micron's Q3 fiscal year 2026 10Q highlights a historic period driven by AI demand, HBM volume, and pricing power. The company reported record revenue of $41.46 billion, a 346% year-over-year increase, and an explosive rise in GAAP gross margins to 84.6%. GAAP being generally accepted accounting principles. So that's your bread and butter right there. Now here are the key takeaways from each core section of the 10Q, tailored for prospective investors. So part 1, the financial information, the income statement. Unprecedented top-line growth driven by surging demand for AI, HBM, high bandwidth memory. Cost of goods sold remain relatively flat. This means, their demand exploded and their income exploded, but their cost to develop that product, which is the chips, remained level. So they're scaling revenue while keeping costs flat. That is a very strong indicator of growth, resulting in an operating income of $28.7 billion and a net income of $28.24. And for those of you that don't know, net income is bottom line profit. So in the last quarter, bottom line total profit was $28.24 billion. Now the balance sheet, they have $30 billion on the balance sheet, so they have $30 billion of cash sitting, in the bank essentially, or in bonds. Cash flow. Now, this cash flow is $18.3 billion for the quarter. So if you take their net income, which is $28 billion, the profit, minus CapEx, they sat at about $18.3 billion. So they are building out CapEx. But if you see here, I believe they spent about $10 billion in CapEx this quarter, but they still have free cash flow. And that's not even, they're cash flowing the CapEx. Bringing in $28 billion in profit and spending $10 billion in CapEx, it's a very sustainable business model. Now, management's discussion and analysis. Now, market dynamics. Management pointed to supply tightness extended through at least the end of 2026, driven, of course, by AI demand. Customer agreements, they highlighted the fact that they have multi-year, I believe 5-year agreements, providing greater revenue predictability to try and avoid this cyclical nature of the industry. CapEx, net CapEx for the quarter was $7.8 billion, as the company constructs state-of-the-art facilities in Idaho and New York to expand HBM and leading-edge node production. So of course they are spending on CapEx. Now, legal proceedings, we'll talk about that in another video. I thought I was going to talk about that today, but this video is getting a little long here. We'll talk about that maybe in the future video. There are some legal issues here, but nothing I don't think is going to be material to the long-term outcome of the company. Now, risk factors, cyclicality risk. We talked about that already. Geopolitical and supply chain risks, trade restrictions, export controls on advanced semiconductor equipment, and reliance on global supply chains. This is always an issue. Nothing's really changed here. Now, execution risk, timely execution of new fab construction and smooth yield scaling for next-gen tech nodes are critical to defending market share against competitors like Samsung and SK. So of course, guys, they're getting a lot of slack for spending on CapEx to build out these fabs. But of course, they need to make sure they're keeping up with demand. Otherwise, Samsung and SK is going to eat up this demand on their own. So the pros here, obviously, they've had massive growth, insanely strong financials, cash flowing like crazy, and they could easily afford this CapEx. Now, the main cons here is historically, this has been a very cyclical industry. So people think, skeptics think they're building out these data centers, these fabs to build chips. But one, they're not going to get the ROI because prices on chips are going to come out. And then two, hyperscalers like Google, Amazon, Facebook, they're going to stop building, which means demand is going to plummet, and then this is going to be bad for Micron as well. But let's talk about exactly why that's not going to be the case. And really quickly, guys, if you guys are interested in seeing my portfolio, which stocks I have, which ones I'm adding, and which ones are on my watch list, join the Patreon link in the description down below. There's two options here. The portfolio, you get to see those things. You can chat with me in either group. Now, the higher tier, the method, really gives you a deep dive masterclass into the method that I use to analyze stocks and grow my $1 million portfolio. But guys, is Micron likely to see an ROI on its CapEx? And it is extremely probable that it's going to see a massive return on the capital it's spending on CapEx, and let's talk about why. Now, the company's heavy spending is already yielding significant revenue and margin growth, which is de-risking a large proportion of its investments. They have sold out capacity. Micron confirmed in its 2026 that its 2026 allocation is completely sold out. So whatever they can create for the rest of the year is completely sold out for the next 6 months. And their initial 2027 production is sold out as well for HBM, which are the chips they use in AI data centers. They're almost completely sold out for the first couple of quarters. So they're basically sold out for a year, okay? And the fact that they're completely sold out for a year shows us that not only do they have strong financials now, they're trading extremely cheaply. They're trading extremely cheaply at a forward PE of 6, and the next 12 months of demand is already fully locked in. These pre-booked contracts, the company has secured over $22 billion in customer commitments and deposits, significantly lowering the risk of the oversupply of AI chips and exploding AI demand. The 4 hyperscalers have been building out like crazy. Now, of course, the risks here, of course, is competition from SK and Samsung. But again, there's really only 3 companies that dominate the space. We do have China trying to get in, but it's going to take multiple years for them to really scale up. And then we have the fact that hyperscalers are expected to stop spending on CapEx. Now, by 2028, CapEx spending is expected to drop all the way down to 6% growth year over year. So let's talk about exactly why this actually is not going to be an issue. And like I said earlier in this video, the main reason is that by the time they're done building out, right? So they're building from scratch. They're buying land, they're building walls, they're putting in the plumbing, the electrical, and they need the chips, of course, to put it inside of the data centers. Once that's done, right, the overall spending is going to drop because they already have the physical infrastructure. But 4 to 6 years after they started, they're going to start cycling through these chips again. And that means you're going to get another run of demand for these chips. Now, that's not to say it's not going to be cyclical still. Like we said earlier, we're still going to have that cyclical nature. But we could essentially almost run through the near-term cycle and keep growing, right? If that kind of makes sense, because that demand for the upgrades, coupled with the fact that we're currently building out, is going to push us through that cycle, right? And I'll draw a picture here to kind of demonstrate, right? So like we said earlier, we expect something like this to happen, right? So typically you'd expect, something like this, a drop, and then maybe like this, right? But the fact that we have this insane demand for the initial build out, then we're gonna have strong demand as well for the upgrades that could keep us way up here, right? And continuing to grow in a strong way, if that kind of makes sense. That's really it in a nutshell, but the compressed obsolescence cycle of AI. Now, traditionally, these chips could last 4 to 6 years in a traditional data center. However, in an AI data center where things are accelerating rapidly, things are improving rapidly, they're expecting that these chips might only last 2 to 3 years. Now, AI accelerators like NVIDIA's GPUs and the HBM attached to them are facing 2 to 3 year replacement cycles, right? So these chips, they started using them in the last couple of years, right? And I believe it was in 2024, and it's really scaled up massively in the last 6 months. So 2028, when they expect, CapEx from hyperscalers to drop, that's going to be right around that time where they need to start upgrading these chips, right? The high bandwidth bottleneck. AI models are growing exponentially. A data center running HBM3E in 2028 will train models significantly slower and at a much higher electricity cost than a competitor running on the next generation HBM. So it's not like upgrading these chips is a huge luxury. First of all, there's going to be competition. So if Google is upgrading to the latest chips and providing a cutting edge product, but then let's say Meta, for example, is using old chips, their models are not going to run as well, right? And the customers are going to notice a difference. Not only that, these newer chips become more and more efficient when it comes to energy use, right? And energy is a major cost for these hyperscalers. So if you're running a new chip that is, reducing costs of electricity, the economics make sense to continue to cycle out of these chips every few years. And that is what we expect to happen. And that is why we expect, even though CapEx for hyperscalers to drop precipitously in a couple of years, that is the physical build out like we spoke about, right? Buying the land, building out the walls, the plumbing, the electrical, the initial chips. But then even once that's done, the continual upgrades will continue to push demand up. And that is why we think Micron right now is insanely undervalued, guys, trading at a forward PE of 6. People is essentially pricing in a complete drop back to the baseline of demand. It's not going to happen. I truly believe this stock is poised to double easily in the near future. My DCF model here, I have it at an 1800 price target in the very near future, and my 5-year price target is even further. Again, if you guys want to see the toolkit that I use to analyze stocks like this DCF model, click that link in the comments to join the Patreon group. But guys, let me know your thoughts in the comments. Do you agree that Micron is insanely undervalued? Are you adding this to your portfolio? Let me know your thoughts in the comments, guys. And as always, let me know how your portfolio did this week. Again, mine did dip a little bit, still close to 1.2 million, but did have a little bit of a hit there. Did outperform the market, though. I believe the stock market was down about 1.7%, give or take. But guys, thank you so much for watching. Stay invested, and I'll see you on the next video.